Hello everybody, my name is Lush Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending June 3rd, 2022. Looking at the indexes for the week, the TSX, Russell 2000, S&P 500, NASDAQ, and Dow Jones were all up after a generally positive week, but with some volatility. Oil and gold were up once again for the week. The big news was on Wednesday, the Bank of Canada raised their interest rates by 0.5%, surprising no one. They also are continuing quantitative tightening. The CPI inflation reached 6.8% for the month of April, well above the bank's forecast, and will likely move even higher in the near term before beginning to ease. As pervasive input price pressures feed through the consumer prices, inflation continues to broaden, with core measures of inflation ranging between 3.2 and 5.1%. Almost 70% of CPI categories now show inflation above 3%. The risk of elevated inflation is becoming entrenched, and the odds of the entrenchment has risen. The bank said the Canadian economy is strong, however, with a strong labor market. Job vacancies are elevated, companies are reporting widespread labor shortages, and wage growth has been picking up and broadening across sectors. The housing market activity is moderating from exceptionally high levels, with consumer spending in Canada remaining robust and exports anticipated to strengthen. Growth in the second quarter is expected to be solid. The next meeting and announcement is July 13th, 2022. The Bank of Canada is unlikely to raise interest rates as fast as the US Fed, and that the Fed will raise twice as much as the Bank of Canada is quite likely. The economy in Canada can be vulnerable due to the high amount of personal debt that Canadians have. We didn't deleverage during 2008 and during COVID like the Americans did, and so the Bank of Canada cannot raise as much as the US Fed. Canadian household credit market debt as a proportion of household disposable income rose to 186.2%, while in the US is 134%. The low interest rate hikes in Canada will also weaken the Canadian dollar. The Bank of Canada is currently at 1.5% interest and targeting 3% as the finish. But it is likelier and hoped for that the Bank of Canada will raise to 2.5% or even just 2% and pause for evaluation. The bond market has priced in the increases already to 3%, so the economy is slowing down somewhat just on the expectation known as jawboning the market. This is one of the benefits of communication by central banks. The hawkish comments, meaning being tough on inflation, is making analysts think that a 0.75% rate hike is coming, or at least that it is likelier than a 0.25% rate hike, with the next two hikes being 0.75%, and then we'd be at 3% by September, and then they wouldn't have to raise any further. Or it could just be jawboning, and the trick is making the market think that a 0.75% raise is coming, and the market will adjust without the central banks actually having to raise the rates that much. There is the thought, especially in the US, that the central bank will raise interest rates in 2022 to stop inflation, but also only to have something to cut in 2023 and 2024. Their next two raises will likely be just 0.5% each, with the rest to be determined. Do note that normally the central banks raise by 0.25% at a time, so even 0.5% is sort of an emergency raise. The Bank of Canada is going to be data driven for future interest rate increases, but a 0.75% increase in July is a possibility, as I've said. Expect at least 0.5% increase in July. The US Fed central bank started quantitative tightening on June 1st as well, starting the process by selling 47.5 billion assets per month for the first 3 months, divided as 30 billion of treasuries and 17.5 billion of mortgage-backed securities. This will increase to the full 95 billion 3 months later. The inflation will cause companies to have higher costs, and companies that do not have pricing power and cannot pass the costs on to their customers will have their margins squeezed and lower profits. The higher interest rates will affect Canadian real estate negatively and could lower its price, causing a domino effect. Because of the high mortgage amounts and high personal debt, there could be bankruptcies, and Canadian banks could be negatively affected, as well as the Canadian economy. This is less likely in the US due to the deleveraging I previously mentioned. Some experts, conversely, think inflation expectations are rolling over and going down, and that we hit a bottom of the bear stock market as well. The US initial jobless claims came in at 210,000 rather than the expected 200,000. The US job market may be beginning to balance somewhat. Crude oil prices climbed after the EU agreed to ban most Russian imports, losing 3 million barrels per day. So a tight market with no spare capacity is missing the Russian oil, and there is nowhere for that oil to come from, so it may have to come out of demand by rising prices destroying demand. OPEC expects to raise oil production by 216,000 barrels per day, not even close to replacing the 3 million barrels per day Russia was pumping. Canadian real estate sales are slowing significantly, and prices are dropping. Condos are holding better than detached homes, however. And turning to China, it is easing some restrictions, increasing oil demand, and eventually reducing the supply chain issues if everything goes well. China is in a bit of a recession and is reducing its interest rate. The lockdowns are running their course, ideally sharp and short, and will eventually allow the Chinese economy to get back on track. Next week, on Wednesday, Dollarama reports, and on Thursday, NEO reports its earnings. Next week's economic events, we have on Friday the US CPI and core CPI numbers for May, and Canada has employment and unemployment numbers. That is the news for the week. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.